I don't know what a normal week is. Customer success teams to clients call to prospecting to
recording a podcast with me.
Of course, a 5 million ARR. When you get to 5 million ARR, they say no, you'll feel product market fit at 20 million ARR. So it's like, I think it's more like the holy grail that we do not know what we're pursuing, but we are in constant evolution and constant search of what we can do. Build this software that would be needed in 2027. The world is changing really fast. So how we are consuming software is changing really fast.
Today I'm speaking with Juanjo, Mestre, CEO and co-founder of Dcycle. Dcycle helps companies get a clear picture of their environmental impact in one place, especially their carbon footprint. Juanjo, I'm super excited that you are here today. I just wanted to start with a very quick icebreaker and introduction. How are you doing?
Yeah, pretty fine. Excited as well to be here.
Amazing. I just did a quick introduction of your company, but I would like it now to hear it from you. So if you explain your company to your grandmother, like how do you typically describe it?
Yeah, basically I describe it as there's a lot of information that companies need to showcase and disclose to other related companies. They could be clients or potential clients or investors, and they need to showcase, or regulators, and they need to showcase and disclose this kind of metrics that are really scattered around the organization. So they are really hard to find because they are stuck in different silos behind people and behind systems that are hard to access by other departments and by other teams. So what we've built is a system, a workspace where everyone can jump in and place their pieces of data and pull out pieces of data for the teams and departments so they can build up any kind of report they need to disclose to any kind of what we call a stakeholder. So, for example, the commercial director is running procurement process for prospects or upcoming clients. As well, the financial teams are reporting to stock exchanges. The compliance office is disclosing to regulators and administrations, and the, for example, HR people are running some quality norms. So they need pieces of data. It needs to be validated and it needs to be reused. So Dcycle is the place to make it happen.
Understood. So this is also the pitch that you present to your grandmother or maybe your family, and they also understand it then directly, or is it you try to present it different?
Hopefully, but I think I'm too biased to truly know if they would understand it. Otherwise, I think they just nod and let me continue.
I understood it now, but I just remembered when I tried to present like what I do to my grandmother, it was so difficult. Like also to not try like English buzzwords. But anyway,
Indeed.
So that is very clear. Maybe also some more information on your company. So you basically started the company in Spain. I think at this point you are over 50 people, and the last round that you raised was a 6 million Series A. Is that all correct, or do you have any other things you would like to add here?
Yeah, we started the company in Madrid, Spain. We are over 65 people. We've raised in total around 10 million euros, and we have offices in London, in Madrid, and in Munich. We're serving right now around 2,000 companies all around the world. So that's the actual picture.
Wow, I already have the feeling this episode will be super interesting, especially because I also have a couple of political questions, and I think this is something we can discuss later. But for now, one more question about your solution. So why do companies now care so much about showing their environmental impact? You mentioned already in the beginning, it's mainly because they have to do the reportings, but is it because there are like new laws or regulations who basically force them to track that?
I think there are two approaches of seeing it. The first one is if they have more control over their data, they have more control over their company. So there was a lot of information, specifically this non-financial information, that was pretty poorly managed. So they weren't controlling and seeing the whole picture of the whole organization. So they can do it right now. On the other side, there's as well regulation, of course. There are new laws in California, for example. There are new laws in New York State. There are new laws in the UK, in the EU. So there's a political force or a regulation force that is pushing companies towards this kind of disclosure. But I think there are two biggest forces. The first one, the market push. So companies are requesting, these suppliers are requesting their suppliers all of these pieces of data so they can build up their own data. Because a lot of what you do is biased on what your suppliers are selling to you. So they are being requested, our clients are being requested by their clients to control and disclose non-financial information. And on the other side, it's the financial force. So investors and funders are as well requesting for these pieces of data in order to gain control over their investments.
Okay.
Because if you know the financial performance and the non-financial performances of a company, you have a lot more information. And there are correlations of how companies with better non-financial performance management, how they perform better. So as well, it's something that is being controlled over funders and investors. So these three forces, regulation, investors, and market, are pushing companies to control and disclose all of the data.
Interesting. But do you think like there are some geographies that push that extra? So for example, in Europe, I would now think that these three forces are stronger than, for example, in emerging countries right now. This is just an assumption, but do you see it like similar?
Yeah, definitely. As well as I was saying, California, for example, or New York State are pushing more than other American states. So as well, the EU and the UK work side by side, but they're pushing more than any other countries. And as well, there are some countries inside EU, for example, Germany, they are more prepared, or France. In France, they are more prepared to tackle this kind of regulation and this kind of tailwinds than in any other European countries. So yeah, it depends geographically. Right now, we're living in a hyper-connected market. For example, American companies are being requested by European clients. So American companies are starting to control their pieces of data as well. Actually, 99% of S&P 500 are reporting non-financial data. So as well, there's quite a trend about reporting and controlling all of their non-financial information as well.
Okay, thank you for clarifying that. Before we dive into the money and the capital raising story you can hopefully share with us, how does your normal week look like right now?
I don't know what a normal week is. Starting from there, they are pretty different one from the other. But I try to jump a lot into how our internal process are working, with one eye on the marketing team, on the sales team. I try to support every team right now, and specifically during Q1 and Q4, the sales and marketing teams. In Q2 and Q3, I try to get closer to product and customer success, which are the four main areas. But as well, I'm connected to the market to see how the capital markets are transforming themselves, how the ESG market is transforming itself, how new regulators and as well are evolving. I'm connected to a lot of companies in our space as we're running our M&A strategies, and we're looking for companies all around Europe. So I'm talking to a lot of these companies or potential new partners to get to know their estate and if we could be good partners. So they are pretty eclectic, my weeks right now, going from investors to customer success teams to a client's call to prospecting to
recording a podcast with me.
Of course.
I think that's also the best part about that job, basically, like if you are a founder or co-founder, that you have and wear so many hats, so it never gets like boring. I mean, like I really liked how you described the problem and also like how you see the different forces right now who support basically these trends to build your company. I would like to understand the turning point in the history. So when did you feel, okay, there is now real business, not just a nice idea? So do you still remember when this point was?
Yeah. I think there's not a tipping point from one day to the next one that you say, all right, I'll have a business. I remember I used to with a friend of mine that he was an entrepreneur as well. So when we were starting up, we used to say, when we get to the first million of revenue, we would have a company. Then we hit the first million of revenue. I said, okay, when we hit 2 million of revenue, we would have a company. Then we hit the 2 million of revenue. I was like, no, when we hit 4 million of revenue, we would have a conversation. This is, I think, it is as well as the product market fit. Everyone talks about product market fit, and again, when you're at 100K ARR, you say no, you'll feel product market fit at 1 million euros ARR. When you hit 1 million ARR, they say no, you'll hit product market fit at 5 million ARR. When you get to 5 million ARR, they say no, you'll feel product market fit at 20 million ARR. So it's like, I think it's more like the holy grail that we do not know what we're pursuing, but we are in constant evolution and constant search of what we can do. What I feel right now is that we are 2 or 3% of what we can do. There's a massive market. There's a massive opportunity. I think our product is really good and it's really transforming how companies operate. We're starting our operations in the UK. We're starting our operations in Germany. So we're really at the very beginning of our journey. So the feeling is that there's everything to be done yet.
Perfect. So now I would really like to focus on the core part of this episode, so your fundraising journey. And we already spoke just very briefly on your Series A, but I would like to understand the full history here. So what was the first money that went into the company? Was it like friends and family, angels, pre-seed? So what rounds did you basically did in the past?
We started up in September 2021, and we did our first fundraising. We closed it, we signed it by June 22. So there was not too long. It was not too long since our starting point. We raised 1 million euros with 4 Spanish pre-seed venture capitals. That we did when we were around 70K ARR or something like that.
And how did you meet like your first serious investors then? Like, did they come in through like a network, or did you do like cold outreach at this point?
Like January 22, so when we, 3 or 4 months, got into an accelerator that is called the Lanzadera. It's in the south of Spain. I think it's the best accelerator in Spain and Southern Europe, actually. So since we got into this accelerator program, the main sponsor behind the accelerator decided to lead the round. So they called somehow their 2-3 main colleagues that were as well the 2-3 main pre-seed VCs in Spain. They decided to get the whole round. So it was somehow easy for us as we were early 2022. So ESG software was on its peak, on its prime. So a super hot market. Even though we weren't experienced entrepreneurs, I think we were starting to demonstrate that we could hit revenues, that our clients started to be really happy with the solution. Somehow easy because fundraising is always hard. Fundraising is always stressful because you're somehow evaluating your project and yourself, or the identity you've put into your project, and you're always tension to get to know if you're going to close it or not, and what are your red lines and your investors' red lines. So it's always stressful, but it was somehow easy to get to the first confirmation that the round was going to become a reality.
Understood. Yeah. And I mean, I fully agree. Like, fundraising is more like a roller coaster. Very often you get like maybe positive messages. You have the first conversations with investors, and then still they ghost you maybe even after the second or third call. So yeah, I think it definitely needs like some time and also good preparation for this type of round. Now, when we look at your first funding round, I would like to understand the stage of the company at this point. So did you already have like a lot of traction? So for example, pilot projects or letter of intent signed, or basically any signal that proved investors at this point, that this is like a company where we can also earn some money with? As
I was saying, when we closed the round, we were around 70K of ARR, so it wasn't that much. I think we had around, but that time our ACVs were pretty low, so we might have around 25 clients, but we were just the 3 of us, so we were really getting started, and these 25 clients were pretty happy with the solution. So I think what we could showcase is there's something here. We found something that is valuable. In these 4 or 6 months, we've managed to build a product, to get the first 20-25 customers, to get the first revenues, even though we didn't know how to charge, how to price, on how to operate a company, but we could showcase that this was the spark of something that could be bigger.
Yeah, that makes sense. And
as well that the market was pretty good.
Yeah, I also remember like a couple of years, like I saw like a lot happening like in that specific space. So do you see it's like more difficult right now in that certain industry, or do you think it's like still attractive to institutional capital?
Well, I don't know if it's the industry what changes that. Of course it changed because Europe got into the omnibus, so there was a major step back on regulation. So the overview of what the market could be has changed a lot. But as well, we're not being evaluated in the same way because we're not just potential. We need to demonstrate a lot of things. So I don't know if just the market change or our stage change. So as well, what investors are looking after has changed. But we talk, of course, about the market. That the market is huge. The market is really good. The potential opportunity is amazing. So, but as well on our side, it's not harder. I don't think it's harder if you get the right metrics. So you're in the right position. Yeah. Our growth is still really relevant. The happiness of our customers is really relevant. I think the stage itself is harder, but not to raise capital. I think the market and the world is actually in a complete transformation by the world of AI, but new regulations, but new operating models. So it's changing a lot. So if you're able to demonstrate that you're surfing the right wave, then it's not harder. I don't think so. No.
That's interesting. Especially also what you mentioned about the stage. So does it mean that you then currently look to raise your Series B after raising your Series A?
We haven't yet. We will be looking for it in the upcoming months. So definitely we'll be going for fundraising in a couple of months. Yeah.
That sounds very good. And now where would you see is like the difference when it comes to the story, like pitching a Series A opportunity versus like a Series B opportunity? Because from my point of view, it's more like about the scalability part. It's more like about really bringing the return. It's about like exit strategies, but also like it's just like this completely different story. So I would like to hear how you see that right now.
I'm not really involved right now on the Series B pitching because I don't know, for the next half of the year or something like that. But of course it changes a lot. What I can see on the Series B is that it is more related to validating your playbooks than validating that you can build a playbook. So on Series A is we validated some part of the market. The question that we need to solve is are we ready to transformate what we've captured into a playbook, into a predictable playbook? I think investors are trying to evaluate, or we as a jumping into Series B stage or trying to complete is the validation of our own playbooks. So our sales playbook, our growth, or our client expansion playbook, our products playbooks, our recurring playbooks. Are we ready to scale or aren't we ready? So of course it is, Series B, of course it is more about being able to scale, but that scalability, in my point of view, is related to building up a predictable playbook with great leaders that could implement that playbooks. So if you have both of these two things, a good playbook and a great manager to run the playbook, then you're ready to become a Series B company. But that's just my opinion. So that's what we're trying to build.
Okay, perfect. I really like that answer. I just thought also again about the general funding landscape, and I post a lot on LinkedIn about US-based companies and innovation versus Europe. So what I see very often is that in Europe, we have like a great infrastructure to basically start innovation, academic research, for example, to basically just build these companies. We also have all these grant programs. So I think this is amazing. But I see a lot of companies basically raising up to a Series A here in Europe, but then they basically have to move to the US because they see that the infrastructure there requires that. And also that investors, like the big investors who fund, for example, a Series B or Series C, require that. So I would like to hear how you see currently this type of thing. Like, did you think, for example, about moving your entity also to the US, or like, did you speak to investors who require that basically?
That's a tricky question, actually. I do think as well that in Europe, we do have a great scenario for starting up. I really like European ecosystem. And I think we have great investors regarding Series B as well, specifically in the UK. So there's Atomico, there are Index Ventures, there great fans there as well. But I think we need to be realistic when we try to see how the landscape for big exit is. The biggest exits in the story, they've been made in the US because they do have bigger companies. They're more used to bigger exits, to bigger markets, to bigger revenues, to bigger structures, to bid higher, to bet higher, or to bet riskier. So they're more used to it. So it's, if in Europe we do not have these kind of big acquirers, because we do not have them, we have a couple of them, but we do not have the amount they have in the US, even though we're trying to get to that point. And I think the right goal is to get to the same point, to build this kind of big companies. And, but somehow it's tricky because while we're trying to build this kind of scale ups or really big companies, in the meantime, you sometimes need to get to the US to become this kind of company. But that's being realistic. If the big players are out there, if the stock exchange is not strong enough here in the Europe to run an IPO, and it's smarter for our investors and our shareholders to run an IPO in the US, I think our duty is to run the IPO in the US, or to aim for it, because their stock exchanges are stronger. So while we build stronger exchanges here in Spain and in Europe, I think some of us, I don't know if it's going to be me, but some of us would need to pay their price by going to the US because it's their right duty, because they are defending their the best interest for their shareholders, their investors, and themselves. So that's actually how actual and real life is. They have bigger and stronger exchanges and bigger and stronger companies. So it's very logic that some of us need to go to the US. Hopefully change by showcasing the entrepreneurship is a good way of life, that we have the resources, that we have the ecosystem. So while we prove it, because that takes a lot of time. In the US, they've been starting up from, I don't know, but they do have a lot of starting up culture. So we need to build up this culture. And the culture is, of course, made up by great examples. So we need bigger exits in Europe to showcase people that they can become rich by starting up. And as well, we need to repair a lot of the entrepreneur's reputation.
I mean, I really like the discussion now, especially on the mindset and the difference between the US and Europe. I see that very often as well. I also heard something very interesting when I visited the Slush event in Helsinki. So at the conference, so they basically also mentioned that we do not really have a talent problem here in Europe. We more have like a talent problem when it comes to really scaling companies. So we have great talent to build up companies up to a certain point, but we are way less experienced than to scale them further and further and do like very big exits. And I think this is actually true because you can't get this talent in, let's say, 5 years or 10 years. It's something that happens over generations and generations. And only then you get basically the people who are experienced and who have done this a couple of times. And this is like the big difference, I guess, between Europe and the US. So I just wanted to add this because I really like your thoughts on that as well.
Yeah. Really agree.
Amazing. I wanted to speak again a little bit more in detail about your Series A, because I think this is a very, very interesting stage. Do you still remember, was there anything specific at this point the investors wanted to see? Like one certain slide, for example, in the pitch deck, one specific topic like a moat or competitive advantage, like anything that you can still remember where they said, Juanjo, tell us more about this topic now?
Yeah, great question. Actually, we did a quite weird Series A because we weren't out there pitching to 100 investors. We just pitched it to 4-5 investors that we were truly close, that we've been talking for a while. So we had been talking to them for almost a year, but just building up relation and trying to get to know them on the personal side and see if they could be a good fit for any time in the future. So we weren't looking for fundraising. When 2 of those 5 investors said to us, I think this is the right time to run a round and to fundraise and to get to the next point. So it was their initiative. So we weren't really teaching and trying to see. What I think they saw is the growth rate was really good. We were growing really at a really high speed. And the second thing is the market. So these guys are growing really fast within a huge market, and the market at that point was expanding. So if they're able to convert everything they've done into a playbook, this market and this opportunity could be amazing. So I think that's what they saw. Our growth rate correlating with the expansion of our market. Everything was growing.
So that was quite interesting. So you just explained me basically more about your Series A. I got all of that. I would like to hear, do you have like any advice for founders or people who are currently building a software as a service company, maybe in a similar industry? Like what would you tell them as advice for 2026 or the next years if they want to be successful?
I think the best piece of advice I could truly honestly give is build the software that would be needed in 2027. The world is changing really fast. So how we are consuming software is changing really fast. I'm seeing it every day. My way of consuming software is really changing. So just give thought around what you're building is suitable for the past or is suitable for the future. And just make this question to yourself. What you're building is agent first or agent ready, CLI first or CLI ready, or it's UI ready, or just try to think, how do you think the future is going to be, and build something for that point, not just for today. Because what is going to win in a couple of years is what is going to be needed in a couple of years, not right now. So if you're building software as if it was 2024, I think you're running into a big mistake.
Yeah, perfect. That was very deep. I also have to think about that, but it definitely makes sense. I see it also like that. For me, it's always crazy to see currently how fast technology is changing, especially in the software industry. So there are basically new software you can use every day, and always I think, oh wow, okay, this is really solving a big thing. So I fully agree on that as well. Do you have like one certain slide in your deck where you think this is like the most important one? So in your pitch deck, could it be, for example, like the mode slide, or do you think it's more about like showing your partners or potential clients who are all happy? Like, what do you think? Is there one slide in a deck that might be more important than others?
I think the most important slide is how we're building a different thing and why our software is truly needed. How our software is an existential piece for companies. I think that's the most important slide.
I would like to see that slide now. I mean, not now in this podcast, but if you want, would be quite curious to maybe link it to the podcast episode. So if you can maybe share like
Definitely.
just this one slide, that might be very interesting for the audience as well. All right, Juanjo, thank you so much for joining this podcast episode. Right. I think it was super, super valuable. I really enjoyed our conversation. And yeah, I wish you also great success with the next funding round. So I also wanted to mention that we will, of course, link to all your company channels and to your private channel. So maybe we have like an institutional investor who is interested in this opportunity, and then feel free to reach out directly to Juanjo.
All right, Niclas, thank you very much for your time as well and for your questions. I think they were really on point. Happy to get back anytime.